Good afternoon. Hello, everybody. Thank you for coming here to this session. It's a pleasure to see all you here. So, as you all know, during the last years, ULI and ESADE, Enrique is here, Eduard, Paco, I've seen him there in the corner. So we joined together our resources to organize always a conference in the Barcelona meeting point that takes place on an annual basis. We would like to remark that ULI and Club Inmobiliario of ESADE we aim to play a relevant role in the real estate market because we would like to become a hub of knowledge, networking, and a source of new business for all the members that belong to both clubs. So today's conference, as you may see in the title, it's about the different capital profiles that today co-live in the real estate market. When we were both executive committees from ESADE and ULI deliberating about what could be this session about, one general remark came across to our minds, which is something that we always hear in the market, that is, well, there are not enough SOCIMIs in the Spanish market, maybe private equities should have a more relevant role, alternative sources of debt are not so present in the market. So we thought, well, why don't we talk about the different type of investors and the different type of capitals that are today investing in the real estate markets. So to deepen this analysis, we have invited three fantastic speakers. We have two here, the other isn't here, but it's still represented in the market. So we have Roger Kirihins, who is portfolio manager and head of European research at Cohen Steers. Cohen Steers is a long-only investor. It's a fund that only invested in real estate companies or SOCIMI's companies. They look after, or they try to invest in companies with management teams that look for a kind of alpha investment basis, and basically this is the focus. They first invested in Spain when the SOCIMIs were set up in 2014. The next one is Alexander Gebauer. He's the CEO of West Europe at Allianz Real Estate. This is an insurance company. We all know them, and we probably all know his most important investment in Madrid, the Monteburgos, which is the office park development, which has approximately 57,000 square meters of offices in Madrid. Enrique Martinez Laguna, I think that you all know him. He doesn't need much introduction. We are all close friends of him. And finally, Alexander Mackenzie, who is principal at Blackstone, who is the one that cannot be here. I am the ULI chairman for Barcelona, and also my company is participated by Blackstone, so maybe I can say something about private equities in the absence of Alexander, or maybe also Eduard can talk about Blackstone, because as you all know, and probably you have read in the press recently, that Blackstone is probably one of the private equities that is most invested in Spain through Anticipa, Aliseda, Fidere, now Hispania, and also Hotel Investment Partners. So, looking back into the real estate markets, and just to set the scene, if you all remember, 2013 was the year that it was a turning point for the opportunistic funds to step into the Spanish market. 2014 was the outburst of the SOCIMIs, probably when you started investing in Spain. 2015 was a year whereby more value-add and core funds also invested in Spain. And since probably then and up to now, also insurance companies jump into the market to invest in Spain. I've seen numbers that the aggregated investment of insurance companies in Spain amounts to nearly 9 billion euros. So to remind also about the size of the market, which I think it's a very relevant number so that we all are situated, is the real estate investment market in Spain has jumped by 5.7 times. So the size of the market in 2002 was about 2 billion, and the size of the market in 2017 was about 12 billion. out of this 12 billion, nearly 60% of this investment is represented by funds. 17% of this investment is represented by SOCIMIs. And 6% of this investment is represented by insurance companies. So looking at these numbers, we all may reach the conclusion that today all type of capitals are coexisting at the same time in the market. So we have invited these wonderful panelists so that we can deep into the analysis and understand the reasons behind all these kind of capital profiles, as we are saying in the titles, have an opportunity to invest in the Spanish market, and why is it still attractive. So Roger, as we have already said, you first invested in Spain when the SOCIMIs were set up. Why do you think that SOCIMIs became so important, so important player in the market since inception? Do you think it's because they hadn't never existed before, and it's something that all the other European countries had it, or it was also because of the market momentum of the real estate at that particular point of time?
It's clearly that before the SOCIMIs, you couldn't invest in Spain. I mean, there was no access, and the market, looked, kind of bottoming out at that time. So we all looked at Spain and said we want to put money in the listed market, but there's nothing available to invest in the listed market. So that's when the SOCIMIs started to come out, and of course, first of that, the government introduced the SOCIMI regime, kind of similar as what happened in the REITs market in the US in the early 90s, late 80s, when there was a big crisis in the US, and to kind of get out of the real estate crisis, they've created REITs also. So I think for us it was a very déjà vu experience, where SOCIMI is a good vehicle to invest in, and to get access to the Spanish market. That was the only way possible. I have to say, the only way for us possible was to do it via the so-called cash boxes and externally managed structures, which definitely is not an ideal way to get into the market, because from a corporate governance perspective, those externally managed vehicles can be suboptimal from a corporate governance perspective. But I think, out of most of those SOCIMIs, a couple came out very strong and a couple came out a bit weaker. And ultimately, I think now, if you look today, you can conclude that, there are good companies to invest in. I think, if you look at Hispania, the one that has been taken out now by Blackstone, I think it's a little bit, it was a little bit sad to see that company leaving, but it was set up also as an externally managed vehicle with a clear starting date to take benefit of the recovery and also a clear ending date. So to be honest, it was set up properly from a corporate governance perspective, and it was a good ride for us. Get invested, enjoy the boom, and get out at a good time. But today, if you look at Merlin, Colonial, I think those companies are very well positioned to be around for many more years and enjoy probably hopeful more cycles also in the future.
So under your views, which is your preferred business model for SOCIMIs? Because it seems that the externally managed model has its weaknesses.
Yes, so definitely preferred. It's an internally managed model. It's a bit low leverage, generally speaking, 30 to 40% through the cycle. And I would say a management team that's very active. I think it's very important to understand, once you're listed, you can play the market not only on the private side, but also on the listed side. So if you look at today, stock market, the market is rather volatile. Merlin trades at a 20% or maybe even higher, but more on our numbers, a 22% discount to its NAV. So I would tell management, guys, you've got a great opportunity. The market, private market is here, your stock is here. You can sell probably a couple 100 million of assets that are, call it non-core. I mean, they've been growing a lot. So now it's time to consolidate and look at your portfolio, sell the assets which are a little bit lower quality. sell them to private equity. Apollo has been rumored to buy 300 million of offices, and management can then buy back shares at a big discount, and the portfolio quality will get better. So I think that's what we ultimately would like to see in the Spanish market as of today, call it like that. On the other hand, Colonial is a good example that owns a very prime portfolio. We like the office market in Spain, where we think they can benefit strongly from the rental growth. And you see management doing a lot of alpha generating projects where they create alpha versus, call it the beta of the market, which is, maybe more Merlin is more a beta play, where Colonial is more an alpha play, and they can create strong NAV growth. I think this is where we mostly see value in the Spanish market.
Okay, Alexander, why do you think that insurance companies are doubling its investment in real estate market, and particularly in Spain? What we heard most in the market is because of the lack of alternative investment opportunities, but I suspect that there must be another powerful reason behind your increased stake of investment in the market.
There sure are a couple of reasons. Yes, the natural asset class for an insurance company or a pension fund, for that matter, to invest in is a government bond, and you know where the government bonds are in terms of interest rates. The Spanish government bond more than halved over the last 4 years. So that's probably not really attractive, given that there are long-term liabilities in the insurance companies' books that need to be at one day fulfilled. But there's more than just a lack of alternatives. There's, I think, real estate, like all the other alternative assets, infrastructure notably, offer a superior yield and a more stable yield in a otherwise quite volatile, and Roger said it, capital market. Superior to risk-free investments, government bonds, at least that's what they called them before certain crises have happened, and we've seen that they're probably not that risk-free in themselves. Spain in particular, I think some facts which are not, I'm not sharing secrets here, the GDP growth in Spain is higher than in the rest of Europe, most of the rest of Europe, and it has been, and we believe it will be for the foreseeable future. There's still rental growth in this market. Prime rents back in the day were overall 25% higher than what they are now. So it's at least not a stupid assumption to believe that the rents can still grow. And if you look at it just at face value, how much a square meter of good office in Barcelona or Madrid costs compared to other, like let's say Berlin nowadays, or Vienna or Amsterdam, there's still some room to grow. These are, I think, the main reasons why insurance companies, like many others as well, but even more so, look into the property markets, look into the infrastructure assets to generate a long, stable, and high-yielding investment.
Okay, interesting to understand why insurance are increasing its investment. So the other question was about maybe between Enrique and myself, we can send a hint of why private equities are also increasing their investment in Spain. I would say, as to start, that another remark that it's always been told about the Spanish market is the lack of big players in each asset class compared to other European countries. So it seems that private equities are more playing this role of creating the big players in each asset class. If we look at Blackstone, that has a clear focus on residential and also on hotels. So Enrique, I'm sure that you are also very close to other private equities, and you can read the strategy and also the reasons behind this appetite for investment. What would be your views on that?
You touched the point very clearly. I think that specialization is key in this market. So we are entering into a phase 2 of that sort of maturing of the market. So we clearly expect someone will be a consolidator of the market. The case of PRS, I think, is very relevant to this market. It's a new type of investment. We've always talked about the commercial property. Commercial property is so well established at the moment. It's really maturing, even hotels, but definitely offices in Colonial and Hispania, Merlin having shopping centers, La España having shopping centers. So I think in commercial asset classes, more or less there's clear leaders in terms of who is dominating the market. Outside that world, I think that private equity has an opportunity, as in the case of Blackstone with Testa, a clear opportunity to be the market leader in a segment that is already in expansion in Europe. And I think in Spain has a lot of sense. Someone entered into a market which, as the tertiary market, has room for growth in rents. I think we all agree that in terms of yield compression, in terms of the beta of the equation, we are at the end of the cycle. So we are mid-cycle as we cover most of the value growth coming from yield compression. But obviously, we are working on the alpha, on rental growth, and I think PRS has that common pattern as well, where rental growth is obvious, as there's a lot of room for improvement in the quality of the product, in how to design the product. So I think that's a clear example of a role for the private equity. I guess as well that it will take a role in the alternative investment, let's say senior housing, student housing. So those are elements of investment relatively new in the Spanish market, but definitely are areas for investment consolidated in many countries in Europe. So I would say that could be another tranche to be covered by private equity.
Not only.
Well, we are clearly jumping into the next set of questions that we had prepared for this debate, which is basically understanding these different types of capital and different sources of capital. Is precisely what kind of investments are you looking for? Are you looking for more of kind of opportunistic investments? Are you looking for more value-add investments, core plus, just yielding assets? And within this business model or type of investment, are you more focused on the alpha or on the beta? You have already introduced that we are in the late stage of the cycle, so there's nothing you can do that much about beta, and you have to concentrate on the alpha. And what would be the role of the management teams in those investments that you are targeting at? Roger, if you would like to start, please.
Yeah, of course. Well, I've been paid to create alpha, so I'm very similar probably as Blackstone. So the last 5 years, we've done 15% per year on the European fund, which is probably 5% alpha per year. So I'm pretty satisfied with that. I hope to maintain that, of course, going forward. And this is on a leverage probably on the portfolio of, I would say, 35-40% LTV. So generally speaking, I would say 15% returns with lower leverage than private equity, and that's after fees. So I think our product is a very appealing. That's a little bit marketing for myself, but anyhow. So yes, we do create a lot similar. I mean, it's all about alpha, but I can buy beta too. So like if I look at Spain today, I say, okay, I buy Merlin, beta. I buy Colonial, alpha. Can buy them both. If I'm not happy with Merlin, I would go to the management, say, guys, I think you should do this or that. Will they listen? Maybe, maybe not. But I can buy more shares, I can sell them. If they don't listen, I can find another investment opportunity. So that's my flexibility, liquidity I always have. A Brexit, take a Brexit. The Brexit happens, the next day all over the place, stocks down, and we do our work. We will say we'll sell UK retail, we'll buy all the alternatives, for instance, industrial, student housing, all that stuff. Since then has done very well. So I think we're very similar as a Blackstone, but we can be quicker, we can be moving in and out. On the other hand, sometimes we don't have the things we can invest in, like a Blackstone. Like Spain, we couldn't invest as quickly as Blackstone could. So sometimes we're later, and sometimes we buy something from Blackstone if they list something. But of course, you have to look twice or three times. Like Testa, we looked at Testa also for the listed market. I couldn't run the numbers on Testa. I can buy Berlin residential at higher yields, probably maybe similar growth. So I was like, well, should I buy Testa in Spain or should I stick to Berlin? I said, no, I'm going to stick to Berlin. I don't have to buy Spain just for the sake of buying it. So I think, yeah, that's kind of answers your question.
It answers. Alexander.
Well, the way you described it at the very beginning, I like that. So like, 2013 happened, and there were the first coming, and then came the Susimis, and then came the others. It's a little bit an evolution. If you look into it, a typical recovery after a bigger market collision. First come the opportunistic investors looking at picking stock and trying something. Then come the REITs. So to say, and the Sosimis have certainly ignited sort of the resurrection of the Spanish property market. And then later on come the institutionals who basically buy into stabilized assets and stabilized markets. And I think there's some truth in that, but now this is blurring. And mixing and blending into each other. Just as the private equity and institutional view on investments is kind of blending into each other. Buying a stabilized asset from, let's say, a developer, PE, whatever, company for Allianz and like-minded investors makes limited sense because the positives are all priced in, and you basically wait for what? For yields to compress further? Good luck. Not really, huh? So ultimately, you wait for the deterioration of your own situation. The negatives are still ahead of you. The positives are already reflected in the pricing. This is why we all those different players, at least that's my perception, not only for Spain, but also for Spain, are kind of getting closer together and looking at things from quite similar angles, looking for the value that can be unlocked within the property, within the investment, not relying on the market and not relying on land prices to rise endlessly. This is not Switzerland. This is something else.
So
Montse, I would say that there's a common pattern in all investors, as we are seeing, and I would make the question to them that at every acquisition you're looking at the moment, perhaps you're not looking for buying an asset. You're looking to buy management attached into that asset, and how you see the management to be bought, because it's not just to follow the cycle. As rents are growing, my rents will grow. So you want to beat the market as all managers. I suppose that we need to play with the capex element. What will be your strategy when looking at investors, when looking at a particular investment, in terms of the management approach and what you are looking for a good manager and how you want to maximize your returns with the optimization of the capex?
Yeah. Sorry, just 1 minute. Can you hear properly the panelists? Yes, is it okay? Yeah, okay. Because I just thought that it was not good because there's a lot of noise outside. So please go ahead. You can answer the question now.
That's for you or for
whoever
anyway,
you want.
What do you start?
How important is the management team? I mean, what?
Well, I think for us it's very important. I mean, we invest in a cyclical business. So offices are cyclical. I think you have to invest in management teams that understand that. You have to invest in management teams that are not focused always on growth. Some of the companies we invest in, they always think, oh, I want to be bigger, big is beautiful. So I think Spain is a good example today, I think. I mean, some, we've had really bad times. We're coming out of the bad times and it's a good time now. But I would say, look what's happening in the US. There's a 10-year yield of 3.8. I'm not saying this will happen in Europe, but maybe in 2 or 3 years' time, the world is a little bit less positive. So let's use the positive environment to also position your company after all the growth we've seen, maybe shrink. And I would say the best companies in our sector that are listed always grow, but also shrink at certain times. And good examples are probably in the UK, where you have companies like Derwent, Great Portland, that currently have 5% LTV, have shrunken from a market cap of, let's say, 4 billion to 2 billion and paying out back cash to the shareholders because the market is not there. And then you're ready for the next, call it cycle again. Although London has held up a little bit better as everybody would have expected, but at least you're positioned to for the next cycle at a certain moment. You do take a view, and Spain today, in my view, runs maybe a little bit the risk of it's going too well and let's grow again and let's take some more leverage on and we're gonna create a lot of value.
Could we discuss about leverage? I think that's another important topic around the business model in which you are investing. What are your views on leverage and what is your preferred target leverage of any investment that you are looking for?
I would say there are two measures, LTV and debt to EBITDA. And from an LTV basis, we generally say around 30% leverage. Companies now are closer to 40%. But I think more important today, given that the interest rates are so low and the yields are so low, you should not only look at LTV, but you should definitely look at your debt to EBITDA ratio. And if we look at Spain today from a debt to EBITDA ratio, you look at numbers of 12, 14, 15. From a global point of view, that's probably 3 times higher than other markets. The US probably trades at 4 or 5 times. So from that perspective, you can argue Spain is actually overgeared again. I'm not saying that I'm overly concerned, but I think today is a time where you are in the cycle because the yield compression, that's over. There's rental growth, I agree, but you still have to, get all the rental growth, realize it, spend capex, all that stuff. It's not gonna come for free. So you definitely have to think about where do I want to be in 2 years from today as a company, and especially if you are a company of, let's say, a size of 10 billion assets. You're not going to delever a 10 billion company overnight. That will take you probably in a market as Spain, that will just take you 2 years to do that. So I would say, from a debt to EBITDA point of view, Spain is actually in the orange-red area from a global point of view. We always look at the globe. We can also invest in the US, we can invest in Japan, we can invest anywhere. So, whenever interest rates might go up in Europe, Spain might have some issues again if it doesn't grow out of it. I mean, I agree, the Spanish economy is growing, so that's the good thing, and I see the glass half full, but I'm very much aware of the risks on the other side too.
So on your views, there should be less leverage on the companies, so as to be ready in case that there's a downturn in the cycle and in the economy, and rental growth stops, so capital values stop. So then there may be...
Yes, and especially because the yields are so low. So you talk about yields nowadays of 3.5%. We didn't have that in the previous crisis. I believe previous crisis yields were probably 4.5, maybe 4. But the interest rates were higher. So everything is so much more sensitive at today's levels that I think you need to be aware of those risks. A 25% yield outshift on a 3.5 yield is a big value decrease.
Indeed.
And I think both topics are perfect examples for how different the world can be, whether you are an insurance company or a SOCIMI. Leverage for us, for me, if I can, 0. Because my job is to deploy capital in a sort of risk-return optimized way. Leverage is kind of in the way. We only look when we compare investment alternatives, and Allianz Group as well is very much a global investor. So it's not like we look at a Spain only perspective and compare opportunities within Spain. We compare Spain with other markets in Europe or in the rest of the world. So we only look at unlevered returns, basically, and we don't need sort of the leverage effect for the assets are sitting on the balance sheets of the insurance companies. They are here in it for the long term, and that's a different story. The topic that you mentioned before, the quality of the managers, is also very different from our perspective, because we don't invest in managers. We are managers. Typically, and in the case of Allianz, predominantly, the equity investments that we have are directly held and directly managed by ourselves, Allianz Real Estate. In this case, a team of 450 people, real estate professionals around the world, asset managers predominantly. Now, when you say like the quality of the asset manager, especially in today's market, when you cannot hope for them for yield compression to forgive any mistake that you do on the operation side, it's a hot one for us. What's the necessary quality of my asset management teams around Europe? Do I have it? Or do I have to invest in the quality of my internal asset management? And I believe there is value in the management, of course, in the operating of buildings, which we currently probably don't leverage to the full extent. And I believe that is for institutional players like us, but like all the others as well. That's still a source of value that we can tap. On how to get there, I think it's pretty much an open question.
So, how to get that, no? A call for the sector and a call for the market. Here there are investors, here probably there are players. So, can we say, Roger, that you are missing more SOCIMIs in the market? Would you like, in Spain, to have more listed REITs vehicles of different asset classes so that you could invest in? And Alexander, are you missing interesting investing opportunities? Because here you have the ones that should provide the opportunities to you and the rest of the investor community.
Someone should lock the door.
No, it's a pity that Hispania went. It's a pity you guys didn't go on the market. I mean, we were ready. So yes, it's a pity Blackstone took the whole hotel market because we clearly saw the opportunity in the hotel market in Spain. So yeah, that was not a great day. But you know, you win some, you lose some. And to be honest, I was happy to sell Hispania at the level. We were actually already selling Hispania a week before Blackstone came in because we thought the level was a little bit high. And Tenerife looks like it will only grow higher and higher. And I believe, with hindsight, that was a little bit the peak of Tenerife last year because the growth is decelerating. So I think there's always risks in the market, and like we will always look at on a daily basis. We look what we buy and sell. We are long-term investors, but we have daily opportunities to take. So yes, I miss the hotel sector, but I thought it was a good sell for us, so that's fine. We looked at Testa. It was too expensive for me, so I would like to invest in Spanish residential, but at the right price. So I didn't get it. We are invested in the residential developers, which I think it's a bit off benchmark for me. It's not successful so far. But I think it's a market that is very early stage. I think that's a market that has more to give, definitely, the coming years. So I might see more consolidation in the listed development market in Spain. We will play that. And alternatives, yes, I like alternatives, but it needs to be the right size. We need size for our, we're big investors. We need the right price. So maybe there will be a logistics platform in Spain in 2 years' time, who knows? That would be nice. Logistics is hot, of course.
What would be your wish list of companies that you would like to see in the...
Student housing, I like. Logistics, student housing. I think those two would be on the top of my list. Healthcare would be somewhere on the top. I don't know the healthcare system in Spain, to be honest, but if you buy long leases, or elderly people enjoying the good weather, I would rather do Spain than the UK for sure.
Or Holland.
Every day, yes.
And which is the minimum size in terms of market cap?
Minimum size market cap, 500 million, probably around 500 million. Sometimes we do a little bit smaller, but then we are smaller. So I only put the European fund in it. So that's not that big. But ideally 750 million to 1 billion.
So take note of what they want, okay? Just so that you can create it for them to invest.
Sorry.
Oh, it's not functioning? It's not functioning?
I don't know whether you can listen to me.
Tell me, I can tell.
Welcome.
No, tell me and I can say it.
Just jump to another.
Okay, so Alexander, maybe you want to answer the question of
I know, you've asked
what
me.
would you like to find in the market in order to invest more?
Yes, you've asked me if I'm missing investment opportunities. Yes, of course, sure. In the office sector, there's someone else who is missing these opportunities, the tenants. I think the average quality of the existing stock in Spain is in many ways not a little bit inferior to what you see in other countries. And I think an upgrade.
So do you think you need an upgrade in the quality of the assets?
In terms of quality of the assets, in terms of also sustainability, technology, and what have you. I mean, the products that are now coming to the market, they are absolutely competitive, but that's just a tiny drop in the Mediterranean Sea. And I think there is a market not only for investors, but also for especially institutional tenants to just upgrade the premises that they have. Investment opportunities that also not only investors but potential tenants, future tenants are waiting for is residential. PIS, Enrique has mentioned it. If you look especially into the bigger cities in Spain, and you look at the rent level for the kind of quality that people get for it, that's unheard of. I think it's way too expensive. There's product missing, clearly, and there's a big demand. And I'm very happy to be part of that with Allianz as an investor, provided that we find the right partners and get to both the quality of the land and the quality of the executed construction in a reasonable time. Student housing, Roger, everybody likes student housing this year. This is, I think there's a market here in Spain also for us. We are investing as Allianz in student housing in the UK, even Australia of all places, but not in Spain. And that's not a given thing, so there's definitely appetite there for that. Logistics, another thing that you mentioned. Personally, I'm a big believer because logistics and retail, you can argue that there are two sides of one coin to a certain degree, and physical retail business is kind of going south a little bit. The logistics, someone has to deliver the goods at one point, might stabilize it. And it's also to a certain degree, pan-European business with patterns that are quite similar between France, Italy, and Spain, and players like Prologis, who we are in a huge joint venture with, who are doing the same. So it's not going to be easy to invest the money in a reasonable way, but if it were easy, everybody would do it. So
Yeah.
Montse, if you can hear me.
Yeah.
I'm totally agree with your statement. I think it's a sort of common pattern for most of the investors at the moment. So accepting some development risk, because we are moving along the risk-return curve. So at the moment, there's few exceptions of investors not accepting some development risk. And I think PRS, the resi market, is a clear example, because the existing product in the market does not comply with what the consumer wants.
Yeah.
The final user is not finding the right product. So someone has to build up from scratch. And I suppose platforms like Blackstone in Testa will be, I've got a platform, I've got a machine, I can enter into development and create the new product for future, which is for accessibility of the resi. Is a main topic of this place in BNP. So I think the resi market, building for rent, is something that we never had before in that market. And I think it's a major opportunity, it's a huge opportunity, as there are this clear implicit rental growth and value creation in that sort of development. Similarly, as it could be in your business, Montse, the hotel business or the retail business is really capex intensive. There's no way to manage alpha, to create alpha, if you don't deploy a significant amount of capex every time more frequently. So we cannot see a shopping center waiting 10 years for deploying another section or segment of capex. So I think we are seeing investors heavily investing to keep momentum on their assets, to create alpha, and I think that's sort of development. We are in a development cycle.
Absolutely.
Very interesting and good that we touch on the capex issue as a source of value creation and to support this alpha investment. So we are coming to the end. Before we do the two last questions, I would like to remind you that you have this APP of Barcelona Meeting Point, that you can send me the questions here if you want. If not, you can just stand up and set the question. But I am happy to receive questions from you because in 2 minutes we will start the Q&A time. So just two additional questions for you. The first one is, you've mentioned during this speech that you analyze across countries and you can invest in any other country. When you have two investment opportunities, one is from Spain and the other one that you are hesitating about to invest, is it Spain against what? Which would be this other country that is competing with us? Because I think that's something that we also have to keep it in our minds. Who are our competitors when we go to the investor markets and we try to capture the interest?
For us, global portfolio, everything counted together, end of last quarter of Allianz Real Estate was 62.3 billion euros. That's debt and equity, direct and indirect, like everything. 63 billion euros. That's a lot. Spain is, from a global perspective, heavily underrepresented in our country mix, which has reasons, but kind of that's a thing of the past, but definitely an incentive to change that going forward. That's why we've opened a branch in Madrid 2 years ago, because you need to be there, and that's why we are very focused on Spain. The one thing that usually kills our deals in Spain before we get there is the speed of execution. For an institutional player like Allianz Group, the number of committee meetings you have to go through to come to a final conclusion, oh yeah, let's invest in this opportunity, is so high that by the time you reach 2/3 of your parcours, the investment is already sold to someone else. That's one of the things that we need to respect there. But it is what it is, we're working on getting faster and more efficient. And one way of doing is understanding the opportunities earlier and not when they're openly on the market and everyone else starts running for it. Against who or which countries is Spain competing? By definition, against all the countries. We have, in the meantime, more investments, more property investments in China than in Spain, and that's kind of remote. We have a big insurance business here in this country, and we have a lot of appetite of insurance companies that are part of Allianz Group that are not the Spanish, not Allianz Seguros, but the Germans, the French, the Italians who are looking at Spain and want to invest there. We're ready.
Okay. What about you?
So I would say you compete against all my sectors that I can invest in. So I wouldn't say a country.
No.
So if I look at my IRR model, I would say Spanish offices are very high on the list, mostly on rental growth. I think you compete with sectors like self-storage. I think you compete with student housing. I think you compete probably a little bit lesser extent to Paris offices. I think lesser. Maybe still a bit Stockholm offices, but I would say that's later cycle. So I rather stay in Spain. I think industrial logistics you will compete with. I think that's about it. And then you compete with probably REITs, so SIMIs that trade. And that's a different story. We didn't talk about it, but the advantage of listed real estate is sometimes that it can trade at a premium to their NAV. And that means they can issue shares and they have a cost of capital advantage. And they can issue shares and continue to grow externally. And that's mostly in the healthcare sectors, the very stable growers. So that's where you would compete, but I think a little bit lower on the list.
Okay, and my last question, not the last questions of the session, is what would be the two challenges that you think that Spain is facing? One challenge can be positive and negative. So I would say which would be the positive challenge that we have had, and which would be the negative one that we have to especially take care of, under your views?
Well, I think the positive one is, and I think if you look at Colonial last week, they had an investor day, is that definitely the rental growth in Madrid is coming through at a very strong rate. Is also the alpha generation is call it full on. I mean, whatever they do, whatever capex program they have, they will rent out above expectations. So I think that's clearly better as it is. So I expect that to continue. And even, I mean, I'm not comparing, sometimes they say, okay, rents are now 30 euros a square meter, and the previous cycle they were 40. But I think the big thing that we do not discuss, we're still comparing apples with pears, is that the building of today is green, it's much more efficient. You can have 9 people working per square meter, where 10 years ago you had, 1 people per 9 square meter, and then you had 1 people on 15 square meters. So tenants can pay much more rents if you would compare apples with apples. So you could argue, I'm not saying it will happen, but you could argue that if the vacancy rate would go to 2% in CBD Madrid, or maybe even 0, like we have in Paris nowadays, rents can go to 40, 50, 60 square meter. So forget about the old cycle, I would say. I think that's where, you know, people that's what people don't really discuss. That's even what landlords or brokers hardly discuss. So I think that's something that has, and that's not only Madrid, but more office markets that are very well positioned from a vacancy perspective, where you can see new rents peaking. Stockholm, for instance, is doing 600 euros a square meter, where the previous peak was 400 euros per square meter. So I would say, don't look always back, look forward, and there's growth. The risk I discussed was purely, I think, don't grow too much, don't over leverage, be very disciplined, and the management teams of the Socimis just, it's not about sell some stuff that's mature, you've done your work, sell it and shrink a little bit, buy back shares if you're at a big discount, create shareholder value for us. I think that's what they need to do.
Very clear. Alexander?
Not much left to add. Of course, everything of what Roger said, plus political stability. I think that's something that is for an international investor who enters a market, invests in a foreign market for the long term. It's a prerequisite. And there we have seen, not only in Spain, but also in the UK or recently in Italy, how quickly the stability can go away or be at risk. So that's the one thing I would be very I feel a lot more comfortable with if we have that under control.
Enrique, would you like to add?
Yes, I think that, and this is one of the topics that we've discussed among the ULI and real estate ESADE alumni chair, where I think that one of the challenges of the sector is to bring the consumer, the client, at the center, at a central point. And I think this is a management matter, how to bring the consumer as the key element of our business, as it wasn't in the past. And I think we need to bring that transformation of the sector with the digitization of our sector, but having always in mind, as managers, having in mind that we are building something to a consumer of new spaces. So I think you touch really during your conversation, but for me that will be the takeaway of everything we think for the future.
Right. We didn't talk about that much about how the landlords have to get closer to the final client, but indeed that maybe would be a very interesting topic for a whole session. So I haven't received any question. I don't know if they all have been extremely clear and they have explained everything in a very right manner. Eduard, you should. Okay.
It's a very quick question about how positive.
Sit open.
How positive would you be on a single-family residential platform? Are you missing this kind of investment in Spain in case of having, I don't know, something bigger enough? And what is the implied yield that you could consider operational issues implied? Just your rationale.
Am I on? I don't know. Yes. So for us, that's pretty small, I would say. But I think, forget about the size. I would say a Spanish residential, a yield. It depends on the rents, of course. But let's say Testa is a good example. I would say Testa, in my view, should have had a yield of around 3.5, 4, and I believe it was sub 3, so 3.5, 4. But yeah, I think ultimately in Spain, I would still say 4.5, 5 if it's X, or if it's not so under rented. Depends if it's Madrid or anywhere else. I'm also a little bit less secure about the whole PRS market, because in my view there's a big difference between German consumers and Spanish consumers, where in my mind, but maybe I'm wrong, Spanish people do like to own their house. Probably when the recovery continues, I doubt if that many people that today say they want to rent, if they still want to rent. So yeah, I don't know, maybe we can do a test. I don't know who owns the house in the out here, or who's a tenant, and or who wants to buy, or who wants to stay a tenant.
Who wants to admit?
But I'm a little bit more like, let's first see it, then build the future on that perspective. I mean, in the UK there's also a whole PRS market kind of developing, where I'm a bit more a believer in the UK from that perspective. But it takes long. My experience is also it takes long to build out a PRS platform, which for us is not great, because the market, the listed market, you know, doesn't has that much patience as a Blackstone can have on a private market. Call it like that.
And maybe to add to that, in the US we have been investing very successfully into multi-family homes, a different scheme which is in Europe not really existent. That's basically a larger property with services to go with it, that you can either use or not use, and targeting the singles and the couples without kids. Like that, they're actively operated buildings, not just a house that you put there and people move in and do something with it. This is actively managed on a daily basis. I think that could be something for Spain and for the rest of Europe, where there is a market. I agree, ultimately people want to own their home. I believe it takes people longer to find out where home will be, because it's one of the late effects of the probably of the crisis, that if you're born in Murcia, you can spend your entire life in Murcia and die there. So you have to move.
Yeah, and
for
people
your job.
they don't have the money to.
They don't have the money, and you can't buy every time you move. You can't buy a flat. So I think there is a segment which is reflecting how society is changing. That is really a target for that, but it's not. I mean, you're totally right. It's not super huge. Huh? It's not. Will not replace office.
No. But we'll see what Blackstone will bring to the market one time.
We'll see. So, are there more?
Or somebody else.
Are there more questions? No. Okay. So, British timing. It was expected to be ended in 5 minutes. So I think that as closing remarks, we are all clear of what investors are looking for. We are all clear on the importance of the management teams, on the importance of the alpha-driven investments. We are also clear that investors are looking for more investment opportunities, which I think that is indeed good news for the sector. Real estate is capital intensive, so whatever we want to do as companies, we need lenders, we need shareholders to support our business plans. So I think that it's a good news and a good moment of the market that we have all type of capitals at the same time willing to invest in the market, and as companies we can choose, or we should be able to choose what kind of stakeholders do we want in our balance sheet. So thank you very much. It's been a pleasure to have all you, and also to you that you have you fly to Barcelona. So we are happy to host you here, and I hope that you enjoy the rest of the sessions in the meeting point, and we can see in the ULI events and also in the ESADE events that we organize for you. Thank you.
Thank you very much.
Thank you.